Alright, if you guys have ever scrolled over investing YouTube, there's no doubt that you've come across the term compounders, or formerly known as double compounders with cheese. These are companies often promoted by a lot of quote-unquote dividend growth investors and people who are seeking to outperform the S&P 500 with individual stocks. Now this sounds a lot like my channel, but I have a few bones to pick with the compounder investing style that I will be talking about today. And this video is not an attack on any certain YouTubers who like to use the word compounder, and the Joseph Carlson saga is over, everybody. This is not an attack on him. So today I'll be sharing some of the issues that I have found with double compounders with cheese. Alright, let's get on the video.
Hello, I like money.
And when I talk about compound investing, I'm not specifying Joseph Carlson whatsoever. It's more the community that kind of derives from that when it comes to like the people who like to pick individual compounding machines. First of all, I'd like to classify using the word compounder is very corny. I think we need to stop using that. I think we need to leave it in 2023. I'd really like that and I'd really appreciate it. But to start off with double compounders with cheese. What's the issue? First of all, the people who owns these compounders, they never compound. They actually don't hold them enough to compound. They sell out at gains or whenever something goes wrong. I'll get to it when I talk about the perfectionist mentality with some of these compound investors, but you don't actually own the compounders long enough for them to compound, so that's one big issue there. I guarantee you one of these big compounder stocks right now is Vici, which I talk a lot about on the channel as well. I guarantee you they're going to sell out of it in a few years. I could guarantee it. Bookmark this video now. But the people who own these compounder stocks, they just don't own them long enough. They see underperformance, short-term underperformance, immediately sell out. They see one issue that could potentially be a risk to the business, they sell out. It's just a big issue, I think, and it's something that I think people need to be held accountable for. Is people who are buying these stocks as quote-unquote long-term investors, and nothing really changes in the business whatsoever from when they bought it, but it was underperforming for a little bit, so they need to sell out, and the money doesn't actually compound. You cannot be a compound investor if you do not like the stocks compound. That's one of the biggest takeaways and things that I've been saying the last few weeks. If you've been active on my Twitter or Discord, link in the description. That kind of links to the constant selling in and out of companies. You see short-term underperformance or maybe 5-year underperformance, and you're really terrified of the company. Maybe it highlights some things that you didn't see when you initially bought your compounder with cheese, and it really just is not a good way to go about investing whatsoever. The best way, which I'll talk about too, is just buy VOO. Okay, you're going to let your compounders compound there, and you're not going to have to do the constant management of risking your own portfolio and underperformance. Just buy VOO, guys. And when you're looking to buy these compounders, you're looking for the best of the best companies in the entire world. The top dogs, the companies that everybody loves, that has had consistently growing 10% CAGR free cash flow for the last 15 years straight. This perfectionist mentality is not good for a couple of reasons, in my opinion. Yes, you should be looking for the best of the best businesses, really strong characteristics, but it also does kind of filter out a whole lot of stocks with maybe some underlying issues, but a whole lot more growth potential and some value there. And I'm not talking about like MPW or Walgreens, I'm not talking that kind of value, but maybe a company like Target, constantly chasing the best of the best and perfect financials and everything along that line really is just going to lead you to sell in and out of those companies, as I mentioned, and overall that's how you lose money. You're not letting your compounders compound. I believe that to be a compounder company in some of these portfolios and individual stock picking, nothing bad has to happen to these companies, and if something does, you have to sell out, even if that means underperformance, and that's included in there. Next, I think there's a copycat mentality. I think there are a lot of repeated stocks. I think you guys know which creator probably originates from, which he can't control whatsoever. We all know that everybody gets copied at some point. Paul from Everything Money, Dividend Data, Joseph Carlson, it doesn't matter. But if one person is buying a stock, it does not mean that all of you guys need to as well. Like, it's actually ridiculous. Rather build an original process, build individual characteristics that you're looking for. Don't blindly copy somebody else. Don't blindly think of selling something because somebody else is. And that's really just how you lose money at the end of the day. And if you're not willing to do any of that, shut your mouth and buy VOO. Also, something I did mention is that compounders can only go up. Now, this is once again kind of a common thing when you look at some of these companies. FICO, Visa, Costco. These are all just companies that have not seen a decline in like the last 15 years. So it's honestly kind of wild with some of these. Unfortunately, none of them are really great value, but these are just companies that don't really see issues with their business a whole lot, which is one good thing for their business in my opinion. You obviously want to see companies that don't get into a lot of turmoil. But, some of the greatest holdings have had issues. Some of the companies with the best returns recently have had issues. You can't be afraid of issues with businesses. It's your job as the investor to determine when those issues are legit or not, and whether it's worth putting your money into it on a short-term decline. Trying to nitpick and find companies that are completely immune to risk and you have pretty much zero risk tolerance whatsoever. You have zero risk tolerance just by VU. You shouldn't be picking individual stocks. So that's pretty much the end of the video. What are the main takeaways? For your compound holdings that you're buying for long term, and I put that in quotations because a lot of you can't stomach 5-year underperformance or let alone 1-year underperformance, do not buy them. They are not compounders. Those are short-term trades and short-term gambles of whether you think the stock is going to outperform. Obviously, do chase outperformance if you're buying individual stocks. It's a huge thing. But a huge part of long-term outperformance is the actual compounding and reinvesting your dividends over a 15, 20, 25-year time horizon. And with some of the moves that I see a lot of these compound investors doing these days of selling in and out of stocks constantly, chasing the next best thing and outperformance of the S&P 500, that is not the way to go about it in my opinion. Alright, I hope you guys enjoy my rant. I hope you guys enjoy some of the logic and maybe the other side that I provided to the argument. Let me know your thoughts in the comment section. Thank you all for watching. Shout out to my channel members, Redwood, Ritz, and Parker. I greatly appreciate all your support. Really takes some weight off my shoulders. Thank you guys for watching, and do dividend stocks, not drugs. Have a good one.